So, Ermotti, good to see you on Bloomberg again. Let's talk about today's announcement. There's everything in here for everybody. Buybacks, strategy targets, etc. What is the most important change for the market to understand in the target reset that you've announced?
Well, from my standpoint of view, is clearly the fact that with welcome clarity about the Basel rules finalizations and also the fact that we have been able to manage down our litigation portfolio again in 2017, we are able to continue and refine and retool our capital return policy. And the fact that we are announcing an increase of our ordinary dividend by 8%, and we announced also a share buyback program that will partially be executed in 2018, I would say is the highlight of this announcement.
The share buyback is something that many people have asked you time and time again about, and the dividend. What is that? Is that getting ahead of your US peers? Is it resetting the agenda for UBS as a capital giver?
Well, actually, it's quite difficult to get ahead of our US peers. If you look at the size of our share buyback, is very aligned with our capital requirements and our needs for growth and regulatory requirements. So I wouldn't really benchmark it in that way. What we do is basically having a very flexible capital return policy with an attractive ordinary dividend and also an opportunity to complement it with a share buyback.
You're putting Wealth Management and Wealth Management America together, a joint leadership. Mr. Blessing joins Mr. Naratil. What is this in response to? Is it in response to margin pressure? Is it about efficiency? Why now?
I don't think it's a reactive response to anything. It's a proactive move that we do following an evolution that we had in the last 5-6 years. If you think about those businesses went through changes, restructuring, refocusing. They went through growth, focusing on their own growth path. And over the last 2 years, we started both internally but also externally to communicate and make, for example, our ultra-high net worth clients businesses working closer together. Our family office operations were working already very close together. Our product and services were working already together. What we do now, we go to the next step of our growth, trying to take advantage of a unique global capabilities that we have, and so that we can offer our clients the best.
Will you be able to take costs out of the business by putting the two of them together? Will there be job cuts and cost efficiencies?
It's part of our plan to continue to have efficiencies in our businesses, and this will help us. For example, of course, we're going to streamline our support functions. We will have only one legal, one risk, one chief operating officer operation. So we will, of course, streamline some of this, but this is a story of growth. This is a story of how we can do better. And partially it's helping us to achieve our cost targets that we still have going forward.
If I look at today's story, is this an Ermotti reboot?
I don't think there is any reboot here. As I said before, I think I would call it more an upgrade of your operating system.
The investment bank came in below estimates. There's a couple of items in there. How did the investment bank do?
The investment bank has been facing, like many of our competitors, a very challenging year, and I do think that I'm very happy. If you look at the performance of the IB, still returning 16% on its allocated capital, with about 20 billions of de facto allocated capital between equity and total loss absorbing capital. It's a very, very good job. Of course, the market conditions are tough, but I'm very pleased to see that, for example, in derivatives, in capital markets, in our advisory businesses, we had great success, and so that we are able to compensate for this low volatility environment we are operating in.
In terms of bonuses and compensation, I think when we caught up with Andrea Orcelli, he talked about a neutral positive, not a neutral negative. The bonus pool, an indication in terms of payments?
I think that the bonus payments are somehow related to always to performance, and I do think this year we're going to confirm our policy that We pay for performance. We pay in a balanced way between rewarding, our employees, but also keeping an eye on shareholders and sustainability.
Markets are flying, records, your stock's at a 2-year high going into these numbers. Sum up wealth management client engagement for me.
If I look at, I do see a continuation as we speak of the positive environment in wealth management. They look at the macro picture, and there is a positive momentum, and there is also, as we enter into the quarter, of course, a seasonality factor. So I do expect this momentum to continue. Of course, geopolitical risks are still there. We can't just basically avoid them. In general, low volatility levels are still there, and therefore they are somehow impacting business activity. But overall, this is nothing different than what we had in the last 4 or 5 years, and I'm pretty confident that we are able to manage any kind of market conditions in a successful way.
How confident are you now about the United States of America post the tax reform? I think Warren Buffett says now we all own 20% more of our companies. Do I need to re-rate what I can expect from Wealth Management America side of the business?
I do think that we know that our clients were very keen to see this happening, particularly the one who are running small, mid-sized companies, and they were very keen to see that signal in order to restart some investments. I think it's not just about investing in financial markets. It's about having enough incentives and clarity to invest in their own day-to-day activities. And I do think that overall is going to be positive, although, of course, long term, we will see how this is going to play out.
A couple of things. Martin Blessing's just joined and settling into his new role, another new piece on his shoulder today. What is Blessing going to bring to you and the board?
Well, Martin is a very experienced manager and has been very successful in his first 15 months in the firm, and I think this is our wealth management clients are high net worth, ultra net worth clients. We have any kind of clients, affluent, so his skill set as a manager and also as a person that in the past was very close to those kind of client segments is going to help us to further develop our businesses and execute on our plans.
Sergio Ermotti, thank you very much for being with Bloomberg today.
Thank you.